Welcome back to the Malaysia Money Matters show. It's the 13th of June, 2025.
Good to be back.
We've got a whole slate of news impacting the market, impacting your wallet. We're going to do a deep dive, try and make sense of it all for you.
Absolutely. Starting local, then looking broader.
Exactly. Malaysian companies first, then we'll zoom out to the international and political landscape. Let's jump right in.
Yeah.
First off, AirAsia. Sounds like they're in pretty advanced talks with Airbus. Big order, potentially.
Yeah, the report says at least 100 jets. And interestingly, they're looking at the smaller A220, maybe for those shorter regional hops. They've talked to Embraer, too.
And this is happening while they're trying to restructure, right?
Mm.
Get out of that PN17 status.
Correct. Plus, the parent company, capital A, is planning to sell the airline part over to AirAsia X. So it's all part of a bigger consolidation and financial recovery plan.
So the impact, fleet expansion, maybe more focus on regional and trying to get their financial house in order.
Pretty much sums it up. It signals they're trying to position for growth post-restructuring.
Okay, next. Bermaz. They're selling off an 80% stake in a Vietnam property venture.
Right, netting about RM 202 million in cash.
And that cash is going where?
Mostly towards paying down loans and for working capital. So it's a move to strengthen their finances. Should give them a small gain on the sale, too.
Got it. Now, Bermaz Auto. News isn't quite as positive there.
No, their quarterly profit took a big hit, a 3-year low, actually.
Why the drop?
They're pointing fingers squarely at intense competition, especially from, the influx of Chinese-made vehicles. They're bracing for challenging times ahead.
Wow. So profit down significantly for the full year and dividends lower too.
That's what they're expecting. It really shows the pressure these new, competitively priced cars are putting on the established players. It hits sales, profits, shareholder returns, the works.
A changing auto landscape for sure. Okay, shifting to construction. Banastra Corporation, they've won a new contract.
Yep, a RM 268 million apartment job. And significantly, it's from a new client. They're trying to diversify beyond their usual base.
That sounds positive. Any concerns?
Well, some analysts wonder if the profit margins with a new client will be as good as their typical, say, 9–10%. But the big picture is it boosts their order book massively. RM 4.3 billion now.
4.3 billion, that's huge.
It gives them really good earnings visibility for like the next 4 years. So landing new clients, even with maybe slightly tighter margins initially, is definitely a good sign for stability and growth.
Okay, let's talk tech manufacturing. CPE technology, precision parts for chip plants.
Right, and they just got their first analyst coverage. Maybank Investment Bank put a buy call on them.
Why the optimism?
They're tapping into that global boom in building semiconductor fabs, those big chip factories. CPE makes critical gas systems for them. Plus, they're expanding their own capacity, and their profits have already more than doubled in the last 9 months.
So well-positioned in a growing niche.
Exactly. Strong potential there, assuming that semiconductor expansion continues globally.
Kananga Investment Bank, they're looking to raise capital.
Yeah, setting up a program for up to RM 500 million through additional Tier 1 bonds.
Which basically means?
It's a way for them to strengthen their capital base, their financial cushion. Gives them more firepower for capital expenditure, working capital, general corporate stuff. More flexibility, really.
Got it. Okay, Sunway REIT. Potential headwinds from the SST expansion.
Seems so. CM Securities flagged that the expanded 8% sales and service tax on rentals, starting July 1st, could make it harder for Sunway REIT to push through rent increases.
And competition is also a factor?
Potentially.
Yeah.
There's a new mall opening nearby, which could add competitive pressure, especially on that part of their income that depends on tenant sales, the variable rent.
So the tax and market dynamics might cap their rental growth profitability?
That's the concern, yes. It shows how these broader tax changes can directly impact specific sectors, like REITs.
All right. Dongguan Industries, the packaging maker, they had a deal planned.
They did. They were going to sell their food and beverage business to their major shareholder. It's off. Canceled. They apparently couldn't agree on a final price. So Dongguan is just going to keep running the F&B business themselves.
Interesting. A change of plans there. Okay, last one on the Malaysian company front. Felda, focus on plantations?
Very much so. They're pushing initiatives like the 25.23 project. The goal is to boost palm oil yield and the oil extraction rate by 2027.
And they're changing how things operate on the ground, too.
Yes, expanding a new model called PMS Damar Berkat. The idea is more transparency, better efficiency, and ultimately higher income for the settlers by cutting down on losses before the palm fruit even reaches the mill.
So efficiency, productivity, better returns for Felda and the settlers.
That's the aim. Key efforts for a vital sector.
Okay, let's broaden the view now. International and political news. What's happening with ASEAN?
Two big things. First, they're launching a major strategic plan for the digital economy, aiming for a U.S. $2 trillion digital economy by 2030 by creating a more single, interconnected market, harmonizing rules around data flows, digital standards, things like that, making it easier to do digital business across the region.
And the second thing?
Deeper tax cooperation, starting from 2026, trying to tackle tricky issues like double taxation, and importantly, how to effectively tax the digital economy itself.
So big steps towards regional integration, especially in the digital space, and sorting out the tax side.
They're definitely significant moves, aiming for a more unified and modern business environment.
Okay, what about the broader Asian economy? Inflation seems to be easing.
Across much of Asia, yes.
Yeah.
Which potentially gives central banks there a bit more room to cut interest rates, maybe support their economies.
But there's a but, isn't there? U.S. tariffs.
Always the but. Yes, the uncertainty around U.S. tariffs and trade policy is a huge shadow. It really affects the outlook, especially for export-heavy Asian nations. Some forecasts are even predicting recession in places like Singapore and Thailand because of it.
So Asian central banks might cut rates even if the U.S. doesn't, but trade risks are a major concern.
Exactly. It creates this divergence and ongoing uncertainty.
And globally, markets are a bit shaky, dollar down.
Yeah, the U.S. dollar hit a new low for 2025 recently. Global stocks also eased off a bit. Seems like a bit of a risk-off mood.
Driven by?
Rising tensions in the Middle East and also renewed worries about U.S. trade policies. After that initial relief from the U.S.-China talks sort of faded, people are moving towards safer assets.
Like gold and the yen?
Those saw gains, yes. Classic safe havens when geopolitical tensions or trade uncertainty picks up. It increases volatility.
Back home, the Federation of Malaysian Manufacturing, FMM, has strong words about the expanded SST.
They do. They're calling it highly damaging, saying it hits almost all manufactured goods and services from July 1st.
What are their main gripes?
A big one is taxing machinery and equipment that's capital expenditure for businesses. They also highlighted the lack of consultation on expanding the service tax to things like rentals. They argue it just pushes up business costs across the board.
And they're urging the government to reconsider, postpone it, or even bring back GST.
That's their stance. They see it increasing operating costs, which could mean higher prices for you, the consumer, and might make businesses pause on investments.
Let's look at jobs here in Malaysia. Jobless rate down.
Yes, fell to 3.0% in April, a 10-year low. Basically, full employment despite industrial production moderating a bit.
So the labor market looks pretty stable.
Economists think so, supported by domestic demand, investment, tourism. But again, those global trade tensions could still impact export sectors.
Yeah.
And youth unemployment is still something to watch.
So strong overall, but with some potential vulnerabilities linked to global trade.
That's a fair summary. Resilient, but not totally insulated.
Infrastructure news from Perak. Plans for the East-West Highway.
Yes, the state government wants to propose upgrades and potentially even a whole new alignment to the federal government.
This follows that recent tragic accident, right?
It does. It's an acknowledgement that the current roads condition needs a serious review. They're also talking about upgrading a nearby hospital and adding emergency facilities along the highway.
Addressing critical safety and infrastructure needs, then.
Absolutely, it's a major route.
Regulatory news. The Securities Commission, the SC, has taken action against an audit firm.
Yes, Chenko PLT.
Yeah.
Suspended for 2 years, and 5 partners sanctioned over what the SC called serious audit quality issues. This involved audits of public interest entities, think listed companies, etc.
And it's not the first time for this firm?
Apparently not. It's the second time they've faced SC action. It's a clear signal about enforcing audit standards to protect market integrity.
Okay, last piece. A quick look at the U.S. job market. Jobless claims.
They remained steady last week, but at a slightly higher level than earlier. It suggests the U.S. labor market is continuing to cool down, to ease off a bit.
Not mass layoffs, but slower growth.
That seems to be the picture. Job growth has definitely slowed compared to a year ago. Might be influenced by various factors, immigration, economic uncertainty.
And this is something the Fed watches closely for inflation signals.
Very closely. A cooling labor market can suggest easing wage pressure, which feeds into their interest rate decisions. It's all part of that global economic puzzle.
All right, that brings us to the end of this deep dive. We've covered a lot. from AirAsia's fleet plans to global trade jitters and local tax impacts. Seeing how these pieces connect really helps understand the forces shaping the market and ultimately your finances.
It really does. You see the ripple effects, don't you? How a decision about, say, tax policy here or trade tariffs over there eventually filters down. It's complex, but trying to follow those threads is key to navigating it all.
If you found this deep dive valuable, if it helped you connect some ducks, make sure you subscribe to the Malaysia Money Matters podcast wherever you get your shows so you don't miss the next one.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.